Waking up, fire in the soul, shots on the screen, taking full control. London session calling, the volume is high. Watching the candles, reaching for the sky.
Strategy locked, no room for doubt. I know what the movement is all about. From the one-step plan to the two-step challenge. Finding that edge, keeping the balance, no distractions. Phone or silent mode, deciphering the market, cracking the code. Precision entry, the setup is clean. Living the life inside the machine.
Patterns forming, packets closed.
Let's talk execution, let's talk speed. The crystal clarity is what we need. Some is action, just the prices I see it. If you dream of the top, then you gotta be it. Spreads are tight, the conditions are prime. Scaling up the ladder, one trade at a time. Global access, yeah, we worldwide. We're the brokerage back firm, right by your side. It's not a gamble, it's a calculated risk. Reviewing the data, checking the list. Green on the screen, yeah, the feeling is grand. The power of the market in the palm of your hand.
Master of the pulse, heart rate steady. When the window opens, I'm already ready. No revenge trading, no chasing the rat. Following the logic, the plan in my head. The market is a mirror, it shows who you are. Trading like a pro, reaching for a star. Seacrest is the vessel, the compass is true. Breaking every barrier, breaking on through. Discipline and patience, the tools of the trade. This is how a lasting legacy is made.
Chasing the sun from the east to the west. Put the strategy through the ultimate test. Sydney is waking while New York is sleeping. Watching the levels, the promise is keeping. Laptop open by the ocean shore. Every pip gained is an open door. No 9 to 5, no shackles, no change. Just the cold hard facts and the capital gains. From the rooftop bars to the quiet floor. Seacrest Markets gives you so much more.
Patterns forming, markets call. Balance-based drawdown, standing strong through it all. Seacrest Markets, leading the way. Making the move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Then the lights let the candles glow. Watching the Fibonacci start to show. Resistance turning into support. This is the craft, this is the sport. Back tasting nights in the early mornings. Heat in the trends and the volume on it. It's a chess game played on a digital board. Striking the keys, striking the chord. Elite mentality, top tier tech. Seacrest provides the ultimate check. MT5 or match trader speed. Technology serving the traders' need. Daily limit set, max allocation. Building up capital, pure dedication. It's more than the payout, it's more than the gain. It's the freedom we build, breaking the chain.
From the first deposit to the maxed out account, watching the influence and impact mount. We're the new era, the elite of the screen. Navigating depths where the giants are seen. Seacrest the name, the gold standard in sight. Turning every vision into brilliant light.
It's a mindset,
Keep grinding,
it's a lifestyle.
keep crushing. We own the vision. We are the flow.
Good morning and welcome everybody to Seacrest Markets live stream. How is everyone on this fine Thursday? Good morning, Mirza. How are you? Good morning, everyone that's in across Facebook, YouTube, and X. I'm just increasing the size of my chart for you all. Unfortunately, even though it is a very large monitor, you will find that it's very difficult to see. Good morning, Ian. Good morning, all. Jedi, good morning. Don't know why I did that. All right, so what a great start. We're over the hump of the week. As we mentioned yesterday, we have some specific levels, specific data that's coming out over the next couple of days, including today, before we head into the weekend. I thought we'd start with gold. As we know, gold is now obviously approaching 4,900, as you can see. 48.88 spot 62 was the high during yesterday's trading. And of course, since then, we've retraced. We are seeing that huge flight to safety. Upside targets on gold now are $5,000, right? Support sitting down at 47.20. So we have some room to play with, and there's still the opportunity to get long on an intraday basis. Now, as we get higher in the level, I've just noticed I've got some super glue here. As we get higher on the level, there will be scenarios where we're going to see a lot more profit taking and a lot more selling into that level. As you can see, we've had some incredible runs since the end of the year all the way in to current pricing. So gold is obviously strongly bullish. Don't really want to step in front of that train at the moment. You just want to continue playing the momentum, focus on where the structure is, look for better areas to get long as per the move all the way up. And just be careful, risk manage now. As we're trading into that big 5,000 level, if we do genuinely perceive that there is continued risk from the US, as well as geopolitically, coinciding with the Davos meeting and Greenland's ongoing issues. I do think yesterday when I was looking at the data as I headed into bed, the Greenland framework pretty much reached the breakthrough. President Trump did announce that the World Economic Forum were cancelling, that Davos were cancelling from the World Economic Forum, that he was cancelling the 10% tariffs on European allies because he believes that NATO reached a framework agreement, which I've got here, on the Arctic security and the future status of Greenland. So the market impact pretty much reduced the kind of trade war factor, or the cloud that was looming over all of the investors and traders and cities' heads. And of course, over the markets pretty much since Monday, which did actually trigger a significant recovery in global equities. We added huge values to the markets yesterday. If we just look at the indices alone, you know, we added 1.16% to the S&P, 1.36% to the NASDAQ, 1.21% to the Dow. And the volatility is down 15.8%, which is good. The dollar index is down 0.01%, so no major change there. Individual equities, Nvidia up nearly 3%, Apple up 3%, Amazon 1%, Google, Alphabet nearly 2%, Tesla nearly 3%, Microsoft down surprisingly 2.2%. But overall market was up. Like if you look, great day. Biggest winners yesterday, Namib Minerals 130%. Worst was High Roller Tech at 35.5%. So crazy market. Excuse me. Bitcoin up 0.5%. Ethereum up 8%. Tether Binance Coin, you can see is accordingly. So really big day in the markets yesterday. Obviously, risk was back in the markets. Gold is still hanging around, and I believe that's partially coming back to a comment I made 2 Mondays ago, maybe 3 Mondays ago now, which was we're seeing the flight and hedge into risk as well as into physical assets. So whilst we're moving and rotating out of safe havens such as the dollar, we're getting long risk such as indices and equities and Bitcoin, but we're also staying long gold. And I think that just suggests and highlights the times that we're in, which are deemed almost uncertain in terms of the overall play. I just realized I went on gold on the wrong tab. I meant to go on gold on this one, but never mind. That doesn't matter. So we've seen what's happened in the indices, but let's just quickly recover and let's just quickly recap on the relief. All US markets posted significant gains, decent one-day percentage gains. So the S&P, the DAX, the Nifty 50, the DAX 40, and obviously the S&P 500. The DAX itself just recovered. It was trading down significantly, but it did end the day down nearly 0.6%. And that was obviously because of the initial weakness in the morning. It did recover 300 points, which is a great move. You know, so it sits back near that 25,100 level as of yesterday's closing. The Nifty 50, which is the obviously India index, definitely faced volatility. It ended the day at 25,158, but futures are pointing to a massive gap up. So that's a good thing. Coming back into gold. Gold, obviously, you know, we're ignoring the inflation narrative and buying gold as a hedge still. I've touched upon that. We're seeing, oh, excuse me, and I have been up for hours. Wow. But it is Thursday. I think I do this every Thursday. I must do. I remember last Thursday I was yawning. So we're seeing hedge from risk, from fiscal spending, from Fed independents that have already kind of identified themselves throughout early 2026. Silver, very similar scenario, reached the high of 95.87, which obviously then cooled back into that 94.90 level. We're starting to see the blow off top signals, but until we get confirmation of specific levels, we have to remain cautious but bullish. Is anyone in any trades from yesterday or at the moment across gold, across indices at all? The only trade I had on was inside here. You could actually have got 2 longs from inside here to capitalize on that initial move into the markets. Markets then did retrace, coming back into the extreme of the move, sweeping and then continuing, which we'll cover. Obviously across the US 500 on the CFD side. But there were 2 trades available inside here. I only took the one. I didn't take the spot 08. I took 2. I'll leave it like that. And then, of course, there was some incredible moves later on in the day. Actually, under -5, you know, it looks good. 12:30, so it's about 4:30, 5 p.m. Let me come down to London. Oops, I just clicked Lisbon. It's the same time. Just for safeties. So coming into 5:30, we had some good moves. I tend to leave the office anywhere between 6, 7 p.m. quickly for dinner, and then I tend to get back around 8. By that time, the move had really materialized and kicked up. As you can see, we had price coming into this area of support. It swept this previous area of demand, which took out only that front leg. This is the real area of extreme because it took out everything to the left. This was already broken by that point. Ascending trend line, which is not the cleanest. We can see that we tried to break. We had a fake breakout to the downside. We then traded back up. Demand was very clearly in control at this point, right? So we had demand obviously being respected from the support area here. I just should have copied and pasted that one. You know, we had demand trying inside here. Whether we take the whole move and actually factor in that level of imbalance or that big area of Marabuso candle, entirely up to us. But demand obviously came in. It failed to take out this level, failed to take out the higher. So if there was enough momentum in the market, we could have definitely looked to take this short because this area was deemed weak, but demand did respect itself. We then done it again. We rolled over, which shows that we're just ranging. On that final move, we got that breakout to the upside, as you can see. Demand then came back in, retested that last point of demand that took out that supply. We respected. And this is where you could have got long. Okay, so really nice long coming in here. So it was 12 minutes past 7 UK time, 20 past 2 US time. We would have then looked for an entry. And entry-wise, somewhere in and around here is nice. So we would have got long somewhere in around here. We're missing that initial pump. We obviously then get involved in the massive pump. We can target previous highs at 3.5R. We move out to the M15 just to actually look at where the structural highs are, which we've got at 6912 is what I was meant to say, not 72. And if we really think we're going to head for the highs, which, I mean, long term, I'm always bullish, right? So we could be looking at targeting 7,000. On CFDs, yes, you can hold it overnight. You know, you do obviously take into consideration the swap charge. Yes, there will be weekend risk, but you can hold over the weekend. You can hold overnight, not like futures. So there's an added advantage with CFDs in that perspective on that particular derivative. So, you know, you're trading, you're long, you've got your overnight swaps. Absolute RR at this present moment in time on a standard 1% risk is a 6R and a 6%. So you're up 6% on that particular position. If you are going to be targeting the highs up around that 6,900, 7,000 level, then you do have, you know, exposure to 12.5R. And of course, as we trade up into that high, yes, it's going to be defended, yet 7,000 will be that target. So, you know, we've got nearly 13R available if we're holding full size, which is a superb trade. And I'm sure many people will be holding that across their personal and their funding. Where do we now see next risk? Let me just clean this up a little. This is why it's the wrong chart, but that's fine. So let's come out to the 4 hour. All right, so 4 hour is bearish, unconfirmed, okay? Why? Because demand has failed to the left. We took out all areas of demand. Now we're retracing. Now, it doesn't necessarily mean that we want to get short up here. In my opinion, you're standing in front of a train. Like I said, I hate being short indices. I will short on an intraday basis, but limited downside, unlimited upside. So you have to be very careful. And obviously, if we come out to the daily, just to actually highlight something even further, on the 4 hour, we're bearish. On the daily, we're still respecting demand. Now, this is the last point of demand that took out the previous high. Everything else is front leg, very shallow, right? So this is still being respected. I'm happy for that level to hold us to continue higher. We did, of course, take out internal demand on this leg, which, of course, pushed this high here. But overall, I'm still bullish, and I'd be looking to target 7,000 on the S&P. So ISAs, if you're in the UK and you didn't add to your stocks and shares ISA or your children's JISAs or your SIPs or your children's SIPs at these levels, then I feel sorry for you. But it doesn't necessarily mean that you're going to miss the next move. As long as you're averaging into the markets for the long term, you're going to be doing okay. You know, this is huge. From 2013, when we were trading at 1,400, we're now trading at 6,903. 390% over that period is insane. Inside that, stocks have done 1,000%. So let's talk about the triple threat release that's coming out today in the markets. Triple threat. Sounds like Triple X from the wrestling days back in the early 90s and 2000s. So we have US GDP coming out for Q4. It's expected to be very strong, 4.3%, which is amazing. Now, the Atlanta Fed GDP now suggests it could be even higher at 5.4%. So that's number one on the triple threat. We have core PCE index, which is the Fed's favorite inflation gauge. If that comes in above 0.2% month-on-month forecast, we will expect a sharp hawkish reaction. And then the third and final dagger in the heart to the triple threat is weekless jobless claims. Forecast is sitting at 209,000. Any significant beat of 209,000 would suggest that the labour market is still too hot, which, if any of you fine young traders and economists out there know what that means, it means that the Fed will potentially delay rate cuts. Now, we want rate cuts. We want rate cuts. We want to see that we are in a period of fiscal growth, monetary policy expansion. We don't want to see jobless claims higher than 209,000 because it'll be too hot. Give me 1 second. Does anyone have any questions at all? Okay. Mhm. It is on fire. I'm just checking something. I was just reviewing something on the market and then just sending something. So does anyone have any instruments they want me to look over? I'm happy to just talk. I'm happy to do whatever you require. Did anyone catch any trades yesterday? Did anyone take any losses? Did anyone take any wins? Look at that move right into there. It's crazy. Huge area of level of formula volume. It's 15. It is a 15, yeah. Cool. Can you take a look at Bitcoin? Haven't been looking so good as of recent. Yeah, of course. Give me 1 second. Is my analysis on point or is my analysis on point? Go through all of my recordings. Go through all of the live streams. When we were trading down here, we were discussing the ascending wedge. I will do, Abhishek. I'll share that shortly after discussing Bitcoin and I'll go down the list. So we were discussing how we were expecting Bitcoin to trade into 98, 100,000, which is this upper ascending trend line, because the way the market was shaping up was very corrective. The overall idea was that markets would realistically try to trade inside this range and target maybe 105,000 if that was going to be realistically the point where we wanted to sell off. But as you can see, we've reached that ascending trend line resistance level. It's not science, it's not fact. This is just a gauge, a confluence indicator. It's confirmation of what markets could do. Doesn't mean it's going to do it. Okay, so every time you see some form of ascending bearish, ascending wedge, which is bullish in movement, traditionally is bearish, right? So this is where that forecast comes from. And we can't predict that it's going to go. We just try to identify and analyze and proactively look at what's happening in the market. So, I mean, my analysis is on point. I can't fault that. I really cannot. So we had that trade into the 97,000 3/4 level, give or take, and we traded off all the way down. But now we've closed below. So a couple of things to take into consideration. The Greenland deal is making headway. Trump has announced the removal of tariffs throughout Davos and the WEF, the World Economic Forum. Risk is rallying. Indices are rallying. So there is a good chance that this particular move to the downside is an attempt to take the market short. However, if we are transitioning back into risk instruments, this will be a fake breakdown to trade higher. So this could just be putting longs under pressure to clear out the weak hands, and then we could look for higher prices in gold. So I know and I appreciate that it's not looking so good at the moment, but it doesn't necessarily mean that we are now going to be trading back into 83s, 82s, 80,000s, etc. It could happen. There is no reason that it couldn't happen, because at the moment we are trying on the higher time frames to recover and trade back above demand. But we've got this here, and this is actually quite key. So yesterday, following the news, we could see that volume, and I'm just going to zoom in. It'll be very, very faint for you all. You could see here that volume kicked back into the market. Oh, it's magnetized to the price. So you can see here that volume kicked back into the market, which is why we have this candle. Oh my goodness. On the lower time frame, I've magnetized it. We have this candle here, right? Can you see that? So what we want to see, ideally, from here, what we want to see ideally from here is, of course, a recovery of that line which we're getting. I appreciate this is a bit messy. And then we want to see demand taking control to take us into the 100,000 level, which will continue up, to 102 to 104,000, which is that last point of major supply. Now, of course, overall, I'm bullish. I'm still long Bitcoin from many, 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 many moons ago, 15 plus years ago. But overall, my average price is a lot higher because I was buying all the way through 2015, 2017s, 2018s, and 2020s as well. So, of course, I want to see it trade up into 126,000 plus, but we have to wait for the market to do that. Let's show the weekly time frame. Weekly. The weekly expectations are 132,000 by the 8th of June. As an investment, Nelson, of course, I can't provide any advice. We are an execution only broker. We don't have an advisory or discretionary license. We only have your CFD derivative licenses for execution only services. As a general guide, if you're looking at longer term investments, you need to take into consideration what we would call, if you as a financial advisor, you would class it as like a KYC. So you need to understand and identify your client's risk appetite. You need to take into consideration their age, their responsibilities, their dependents, their lifestyle. Everything has to be taken into consideration. So a specific recommendation on an investment, when it's to a third party, there is so much more that needs to be taken into consideration rather than a general rule of thumb. For example, just a general rule of thumb, when it comes to understanding and identifying your client, if you was a financial advisor, for example, if they were 20 to 35 or younger, you would look at their lifestyle. You would have realized and identified quite early on that because they're so young, you would be primarily looking at growth instruments where they can grow their capital rather than income deriving instruments. Whereas if they are 50, 55 plus and their risk appetite is mitigated as more, because they're looking at end of term, they're looking at retiring, they're looking at protection of capital, you wouldn't necessarily expose them too much to growth. So you wouldn't necessarily have the main risk exposure in equities, Bitcoin, or equities or Bitcoin, sorry. You'd be looking at more income denominated investments. You'd be looking at government bonds, whether that be US, UK, or a global mix. And then you'd have a smaller percentage in equities or risk products. So I cannot answer that first and foremost because the company is not regulated to do so. And also, we don't know, that's the main one, but we also don't know your requirements as an investor. And if we were regulated to do so, that's what we would need to do in order to identify it, unfortunately, Nelson. Whilst I'd love to give you that guidance and I'd love to suggest where it could go, it's best not to, because we are not regulated to do so, and this is a live stream, and I do not want to put my license or regulatory standings at risk. Now, how I invest is the majority of my portfolio is invested in growth. There are some hybrid elements that take into consideration income. So I'm in certain stocks that interesting. Seeing as we're discussing Bitcoin, there's a comment down in the left-hand corner on Bitcoin, which I'll keep up. There are, thanks Jedi, there are some income deriving products in my portfolio from dividend yields that I've got inside stocks, whether that be Coca-Cola. And no, unfortunately, I'm not Warren Buffett and I don't earn a significant dividend yield or a significant dividend amount from my Coca-Cola shareholdings like Mr. Warren Buffett did. I cannot believe, I do find that amazing. Warren Buffett, right? He's a shark. I've got my own opinions on him, but you cannot doubt that he's a great investor. However, just the fact that as an investor, through his shareholdings or through the shareholdings that he once had in Coca-Cola, and I'm sure he still holds personal as well, he was earning more than the CEO. It's just insane. And that's the power of investing. It's not all good. It's not all sunshine and roses, but there are some joys that we can take away from the market. However, yeah, coming back to my point, I do have some stocks that, of course, have dividends, but the majority of my portfolio, because I am a younger individual, even though I'm 35, I feel old. No, I get told I'm getting old, which is interesting, but I feel 21. The majority of my portfolio is in growth stocks, growth instruments. So I have a split percentage in ETFs, and then with the different percentage of my capital, I invest into growth stocks, looking to try to exploit beta through momentum and value. So that's how I do it. Long term, realistically, we're talking, it's still not long term in an institutional sense of the word, right? Anything less than 12 months from an institutional perspective is short term. Long term in an institutionalized world is 5+ years. But from a portfolio, semi-active portfolio, I call it, because there's differences. You've got active, which is day trading, right? Or active, which is actively involved in the portfolio on a daily basis. You've got semi-active, which is not daily. You've then got passive, investing as well. So passive investing is just long-term buy and holds. Semi-active is actually trying to get intricate executions and trying to manage the position and closing it out where you see fit. I let the charts do the majority of the talking for me once I'm in a position. Yes, I'll take into consideration the Q-on-Q earnings from the companies themselves and the economic outlooks, and I'll also look at time-weighted returns as well, so opportunity costs. And that comes, so for example, you know, if I'm seeing, thank you, Jedi, appreciate that. That's wonderful to hear. In terms of lost my trail of thought. Wow, how's it gone? I can't remember what I was saying. My apologies. See, I'm getting old. I actually forgot what I was talking about. I know what I was talking about, but the specific paragraph I forgot. Nevertheless, my portfolio is mixed between index funds, ETFs, because that's going to give me the performance of the benchmark and the main exposure to, for example, the Mag 7 and multiple indexes, multiple constituents within the index across, for example, the S&P, and of course, being in the UK, we have the ability to invest through something which is almost a secret weapon called a stocks and shares ISA. And the stocks and shares ISA allows you to accumulate growth inside that portfolio, which is completely tax-free. Of course, that's not available to worldwide. The dark side has taken over your bright side. Yeah, it has. Memory has lost. It has. I won't do the voice because that will then get clipped, but I was doing a bit of a Yoda impression there. So coming back to Bitcoin, my expectations on Bitcoin are still $135,000. And the timeline in order to achieve that was originally derived from that previous move, right? And we can see that we've got range here before that explosive upside. We've got a range here before that explosive upside. Obviously, nothing is a science. It's more of a gauge. You know, if we were realistically to range for another 245 days, my target for 135,000. I think I was. Yeah, cheers, Nelson. Thank you. I'm glad there are young people in this room. I think the average age is about 50, based on the 3 ages I know that are roughly in here. So if anyone feels free to bring the age down. So yeah, my expectation of, you know, the 30th of June, 135,000 would have surpassed if we were trading, 245 days on this range. And the market could range. It could really try to find a base inside this 89,000 level. It's not always going to be, like I said, sunshine and roses. We are going to have range-bound markets, but overall, we're optimistic. Yeah, like it said, it's failing to recover following the news that Davos and tariffs are being reduced. But what it doesn't mean is that it's going to continue. It just means it's struggling at this moment in time. We've seen it before. Look, struggles, trades up, struggles, trades up, struggles, trades up, and then continues. Struggles, continues. It's ebbs and flows of the market. And I could be biased, right? The way this looks to me is bearish, but I'm looking at this level being respected. At the moment, this looks like it wants to go lower. Why? Because we've created the bearish flag. And as I highlighted on the lower time frames, we have that ascending wedge, which looks cleaner on the 4 hour. We have that ascending wedge, which suggests that from here, we're only going to get up to around 100,000, maybe 102,000, and then we're going to sell off. Now, from there, that doesn't necessarily mean that existing level on the higher time frames will be respected. That could now be weak. So I'm not, I'm not inclined or adverse to the understanding that we could go short. It doesn't look great, but if you look at where these levels are, we've recovered. We've recovered here. We're trading back inside. I'd like, based on historical expectations, for price to trade to the upside. So I'm not too concerned at the moment. If we start getting a breakdown and we've recovered, we then roll over, and then okay, well, I'll start looking for shorts. My initial target will be 80,000 because that's the low. And then I'll look at re-establishing price from there. Nothing more, nothing less. Let's take a look at euro dollar, because I know that was requested by our young, I'm trying to find the name, Abhishek. Un momento, por favor. I'll get it up. I'm just trying to... Let's see if we can get the right chart. I have forgot how to. How have I done that? Nope. No, I don't want to do that. I have forgot how to get up my toolbar, team. How's that gone? My memory has gone today, team. No. That's so annoying. It's almost like, no. Oh, this is okay. I'll do it on this one. Because I want the chart. I want the drawings for you. Because I like showing you my drawings. Give me 1 second. I just need to get ES1 back. Cool. Oh my goodness. I'm having a nightmare. All right, so this is where we are in euro dollar. So we're trading in 118s in that whole big area. Obviously, the price is actually at 116.87 freeze. So, you know, we've got some chop. I mean, our analysis is always on form. Always on form. So we had that reaction from Friday, pressed up, came into supply, we've traded lower. Now, since then, we've recovered. So similar scenario, there's something in these demands to the left that have gave us bullish rhetoric in line with expectations of risk coming back into the market. So traded from 115s to 117s. Looks like we've swept this level into this area, which has slightly swept or fake breakout to the upside. We can see clearer. As you now can see, lots of volume in the market, lots of positions trading in and around here. Lots of positions. And that is called an efficient market. That's a very efficient market. So we've had that huge move to the upside. We've taken out any stops above here. And probably we've now taken stops that were targeting that move. So after this, where do we look? I really don't like this, but whatever. We've got this. We can see that supply was in control. We failed. Realistically, we'd be looking at this high getting taken. Why would this high get taken? Because it's weak. Why is it weak? Because it failed to take out this low here. We pulled back. We didn't take it out, but it is still weak. This area of supply got respected. So this area was deemed strong. So we would have potentially been looking at how do we get short from somewhere inside here. What then happened is shorts got trapped. Price then took out all of this and come into the extreme. So shorts got trapped, potentially stopped. Any new entries would have got stopped as well, depending on how tight your stop is. If your stop was above that higher, then happy days, you're still in the trade. Now, we are still bearish on the front leg. And I'm saying front leg, okay? Because obviously if we look to the left, we've got this huge leg to the upside, and we're only trading breaks of structure on the front leg. We haven't taken any breaks of structure from the left. The major structure is down here by the looks of it. Obviously, it probably isn't when you zone out, but just on the lower time frame, we can see it looks like it is. So price has traded in. We've respected the extreme at 117.4s, and then we've traded lower. So you have a decision to make here. If we believe that supply is still in control and shorts are trading in, then we're going to be continuing to look for shorts somewhere inside this move to the downside, which realistically you're going to be looking at somewhere like here. Stops would at worst be here. And I say at worst because at best they'll be up here. That's if you think risk is going to trade off. If you think the euro is going to go to parity again, right, then you want higher stops. You want to give yourself enough room to breathe. Now, target-wise, you know, what are you targeting? Maybe something down at 116.37s maybe is a good level to target. Again, this looks like Bitcoin, right? Different areas of the chart. The Bitcoin chart is on the low of the legs. This is in the mid of the legs on the hourly, right? But we do have a very crappy triangular pattern. So this would traditionally be a bearish pattern, right? So the expectations traditionally on a bearish pennant or a bearish triangular pattern would be bearish, because you'd be looking for a continuation to the downside on the breakout. Now, your initial target would be realistically the low of the entry. Give me 1 second. And then your overall target would be from the break down, so like this. Okay, so the move into the leg is usually the predictive expectation of the target or the area of TP. So that would be your initial target, which if we were to grab a little arrow, grab that, let's say it breaks out here, your initial target is 116.13s on euro dollar. Now that's if we expect risk to continue to the downside, which at this moment in time, it doesn't look like it wants to trade higher. It's very, very corrective, and that's okay. Markets do range. There's 4 trades, right? Long, sideways, short, cash. In theory, you could say there's only 3, but there is 4. In a sideways market, you might be sitting in a trade. My issue with the euro is Europe. That's my issue with the euro. Europe. Unfortunately. Love Europe as countries, love the citizens in Europe, do not love the people in charge. And that is unfortunately why, if you go back to Brexit, why the majority of people, well, the majority of the logical people, should I say, were voting for Brexit. And it was because the unelected leaders inside the commission were dictating foreign policy. And I believe that's why we are seeing continued uproar in Italexit, which is Italian exit, which, to be fair, Italy doesn't really bring much to Europe, unfortunately. It's, you know, if they were to split Europe up and do it as strong versus weak, the majority of the members within the European Economic Area or the member states would be screwed. The majority of Europe is carried by Germany, maybe France, but Germany mostly. I think Poland's coming into the fore. You know, if you look at certain strengths about the European economy, Germany, Poland. I love Poland. Absolutely love Poland. And I love their stock market. Anyway, so coming back into Euro. Did I go to the hourly chart on Euro? I am on the hourly. My bad. That's the old age creeping in. So coming back into the M15, that's realistically where you'd be looking. If you were looking at refinements, because I know many of you trade the lower time frames, after we came into this level, first port of call would be, where's demand? Where's support? Well, it's here, right? Well, level got smashed. Okay, so now we're looking at what's going to be the next point and move. So we'd be looking for a pullback into something, which is this. Did we get that? Yes, we did. We got a huge wick retest, which then continued to the downside. You could say that this is that next point of supply. I don't like it. It's not the cleanest, but we have got it. And the reason I say that, right, is because everything's got context. Nothing is ever black and white, and everyone has different ways of doing things. It doesn't mean they're wrong. It doesn't mean they're right. EU doesn't work. Culture's too different. Correct. So then we've got that break to the downside, retest. And this is for me. This is for me where I'd get short. I'd be short here, somewhere in here. So break, retest, continuation, break, retest, continuation. Supplies in control, demand's failing. We do obviously have to contend with this area of demand, but the point is, if we genuinely believe from this higher time frame level that supply is now taking control, factoring in the higher time frame that we saw to the left prior on the analysis, if we genuinely believe that supply is in control, then we'll be looking for shorts. Now, my initial short would actually be here. I'd then sit through drawdown, which I'm okay with. Ideally, you'd wait and get in maybe here, but I'd be in about here, somewhere in here. Let's say here, because I'm on the close of the opening candle. Stop above 117.34s, 117.42s. Doesn't matter too much to me. You know, that's 10 pips. It's quite a tight stop. 20 pips, maybe. You're targeting 1-to-1 originally. Can we get that? Yep. Structure to the left is still dictating that. 1-to-1, 1-to-1.5 is prime, really, which I can get. I have to wait till here. And I know that says 1.49. I can read 1.52. Right, there we go. So there's 1.52. I mean, we have. I mean, it's very difficult to target something down here, but 116 would probably be your longer term target if we're going to get it. Are we going to get it? You know, something in 116s. There's a lot of traffic down here, a lot of areas demand. I mean, we're sitting through traffic right now. And if risk switches back on, well, this trade's going to be blown out of the water and we're done. So, you know, there's only 6R available. Most day traders that are trading are going to be looking for 1-to-1.5s, 1-to-2s, maybe 1-to-3s. There are some traders that will look for 1-to-5s, 1-to-10s, 1-to-15s, try to hit bigger home runs. But this game is about capital protection, staying in this game. Okay. So, yeah, Euro dollar's range bound at this moment in time. Looks like it's a bearish continuation pattern, but it's being held up. You know, there's a lot of volume from the broker anyway. There's a lot of volume from the broker or the broker's liquidity provider in and around this level. This black horizontal line's classed as the point of control. So that is where the most volume is sitting, in and around here. So we're seeing buyers and sellers battle this out at this moment in time. So if you were to use some form of additional software where you maybe like Bookmap or Flow, something like that on the future side, you'll be able to see on a CME basis the volume that's coming in for the futures instrument on Euro, for example. The only volume we have for the CFD side is denoted from the liquidity provider if they share their data to TradingView, for example. If, of course, you're only analyzing and executing on MT5 or the broker's channels and platforms, then you'll be able to see the volume from their side only. But it doesn't take into context the bigger, wider audience. So coming back to the original point, if you are using some additional software, you know, you'll be looking at your depth of market, you'll be looking at your order book, both resting orders and active orders that are coming into the market. And then maybe you'll also be taking into consideration what they call the volume bubbles, the volume dots, which shows where orders have actually been executed in that. So we need to see, like, this huge selling pressure. Like, look at this on Wednesday, 2:30 New York time. Huge sell-off in the euro. If we look at the way price is, we've come back in, respected this, and now we're ranging. So we need to identify supply taking control, demand actually failing to continue shorts, or we need to actually start doing the opposite and seeing demand being respected and supply failing. Because right now we are sitting, I didn't spot that originally because I wasn't looking there. We are sitting inside this. So we've had that reject. We tried to take it. This high is actually now weak. So we could take these highs out and then start again, which is exactly the same as a bearish pattern, right? So just keep your eyes on euro dollar. Hopefully that helps you, Abhishek. I think, yeah, Abhishek. Sorry, Abhishek. About the poor leadership in EU. EU doesn't work, culture too different. Yeah, correct. Does anyone else have any questions at all? Any last comments for the final 2 minutes of today's live stream? No worries, Abhishek. Look forward to seeing everybody tomorrow. Again, please, whatever platform you're watching and following us on, like the content, follow the channel or subscribe, and please turn on the notifications bell to be made aware of the live streams and any other content that we put out there. Live streams are daily, Monday through Friday, 8 a.m. UK GMT to 9 a.m. UK GMT, hosted by none other than myself. Any questions, any queries you have, please feel free to bring them to the live sessions. I'm here to help. I'm here to provide overall market analysis, ideas, and education for general purposes. And I look forward to seeing you same time tomorrow, Friday, the 23rd of January, 2026. But as always, it's been an honor and a pleasure. And I look forward to seeing you all same time tomorrow. Have a wonderful trading day. If you need me, feel free to drop me a DM on X or Instagram or send an email. But other than that, look forward to seeing you on the inside. Trade safe, trade well, and trade secret.
Patterns emerging, psychology's key. Discipline strong, no greed in the spree. Risk managed tight, emotions in check.